video will be all about dividends and compound interest. Now, these concepts may sound complicated, but they're actually pretty simple once you break it down. So let's take a closer look at how you can make money in the stock market with dividends and compound interest. So when you invest in the stock market, you can make money in two ways. One is through dividends and the other is through capital gains. Now, dividends are payments that are made by the company to the shareholder, and they're usually paid out quarterly. Some pay out monthly, but they represent a portion of the company's profits. Now, if you own stock in a company that pays dividends, you'll receive a portion of these payments based on how many shares you own. Now, let's talk about compound interest. This is when you earn interest on your original investment, as well as on any interest that your investment has earned. It's like a snowball effect where your money grows faster and faster over time. Now, compound interest is the concept of earning interest not only on the original amount of money you invest, but also on the interest that the money earns over time. So, for example, let's say you have $100 to invest and you put it in a savings account that earns 5% interest per year. After the first year, you would have earned $5 in interest, bringing your total balance to $105. Now, if you leave that money in the account and earn another 5% interest the next year, you will not only earn interest on your original $100, but also on the additional $5 in interest you earned the previous year. This means you would earn $5.25 in interest the second year. So when you combine dividends with compound interest, you can really start to see your money grow. Now, you don't have to reinvest your dividend payments, but by reinvesting your dividends back into the stock market, you're buying more shares of that stock, which means you'll receive more dividends in the future. And if you keep reinvesting those dividends, your money will start to grow exponentially. Now, most brokerages call this the DRIP program, DRIP or DRP, which basically stands for a dividend reinvestment plan. So what does all that mean for you? Well, if you're looking to invest in the stock market, it would be a good idea to look for companies that actually pay out dividends. And if you can reinvest those dividends and take advantage of the compound interest, you could potentially earn even more money over time. So how do we find dividend stocks? So one way that I suggest that you can research dividend stocks is by looking up Dividend Aristocrat stocks. These are a list of stocks that have consistently been paying and increasing their dividend for at least 25 years consecutively. So that means these companies are very strong financially, reliable, and have a really long history of maintaining a strong performance. One example on that list would be a company called Procter Gamble. They're a consumer goods company that manufactures and sells a wide range of products like, household cleaning supplies, personal care items, baby items, etc. And that company has had a long history of consistent earnings growth and has increased its dividend for 65 years consecutively. So it's one that you can safely say that you can trust. Now, as of March 2023, Procter & Gamble's dividend yield is at 2.5%, meaning for every $100 that you invest in the stock, you would receive $2.50 in annual dividend payments. And so not only will you benefit from capital appreciation, which is basically the stock price moving up, you can also benefit from the dividends and reinvesting those dividends back into the stock so that, again, you can compound your money and compound your interest. As always, I hope that this video has helped you in some way. If you have any questions, please leave them in the comments. Also, don't forget to like the video and subscribe to the channel if you haven't already. And I will see you all in the next video.